Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. Happy 2020. Hopefully everyone had a fantastic New Year's and they're ready to get back on track with the stock market. So in today's video, I'm going to be breaking down my current stock portfolio for January of 2020. This has been a decently requested video in the past, but the problem was my portfolio hadn't changed for a couple months, so there wasn't really a point in talking about the same stocks that I had. And with the start of the new year, I kind of went through my portfolio, I sold some stocks, and I bought into some companies that I've been watching for a while. And kind of the benefit of being on YouTube and having these kind of diaries of my thoughts on these companies is I have a video for every company that I'm going over today. So as I start talking about it, there will be a little thing up at the top where you can click if you want a more in-depth analysis on the companies that I'm taking positions in. So in this video, I'm going to be talking about one positive and one negative for every company I own. And I think this is really important because as people are going through and starting to look at their New Year's resolutions, kind of taking a look at themselves, see what they can improve in the future, I think it's important to look at your investments and see what they've been doing well, what you see as the future for them, but then kind of also see what the risk involved with each of these companies is. So before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. All right, so my favorite stock and the largest position in my portfolio is Twitter, being 22% of my total portfolio. And so this is a company that I've talked about in pretty much every video. So if you kind of want the overall analysis of what I have, I'll throw that up right now. But the reason I really like Twitter, one of the main positives, not just based off the fact that I love the company, Twitter is probably my favorite social media platform out there, but they are highly discounted. And so I think that's really attractive. And so Twitter had some problems with their last earnings where they had an ad bug which resulted in lower than expected earnings. And so that bad news pushed the stock down pretty far. And so when you have bad news pushing the stock down, you have a lot of room to go. And so it built up a nice support around the $30 mark. I took a position at the $30 mark and it's pushed up to around $32 currently. And so that's kind of the positive with Twitter. The negative is when you look at the all-time history of the stock, it's not super attractive. You have a lot of ups and downs and it hasn't been a steady climber since it's IPO'd in 2014. But I think the company's in a great position to take advantage of the upcoming decades. I think Twitter is really good at what they do, and I think they've kind of cemented themselves in part of society. So I think their longevity looks really good. I think once the next earnings come out and they're normal, because the ads hopefully have been fixed since then, I'm really hoping about that. But I think long term, I love Twitter, and that's why it's my largest position in my portfolio. All right, so my second largest position is actually StarBucks. I was kind of surprised by that. It just happens to be it's a position that I've held for a little bit, and once I sold stuff, I bought smaller proportions of the other stocks. So this is probably a company that I will sell a couple shares of and move them into other places. And the reason is it's not one of my favorite positions out there. And I don't think it should have the second largest position size in my portfolio. But the positives with StarBucks is that they are totally ingrained in the American way of life. The city that I'm in right now, my parents' hometown, or I guess where I grew up, I think there's 15 Starbucks just in my town of like 65 or 70,000 people. So Starbucks is completely ingrained in the American way of life, and I love coffee, so I think it's a great place to put my money. Another really good thing I like about the company is that they've expanded internationally. And so I'll throw up a chart right now kind of showing the proportion of stores that they have in the US and how that proportion has gone down as the international market has increased. Recently I went to Australia and I realized that they have not made it into the Australia market. I think they've tried, but there's so many coffee drinking countries out there. As I talked with the Luck and Coffee video, there's millions and billions of people out there that have not fallen in love with coffee yet, and that's a great potential in the future. So not my favorite trade out there, but it's my second largest position currently. All right, my third largest position is Bitcoin. Bitcoin is the riskiest position I'm in, but I think it's one of my favorite positions. I'm currently down 30%, and you might be like, you're down 30%, why is it your favorite? I just love the idea of Bitcoin. When I talk about these companies, I talk about how it's important to kind of know the company that you're taking a position in. Bitcoin, I don't fully understand how it works, but I love the idea of it. And so it's kind of something where it's a roller coaster, but I want to be on it for the ups and downs. I am betting on the fact that I think it'll go to $100,000 before it goes back to 1,000. And there are plenty of graphs out there. One of my favorites is called the rainbow chart, which is a logarithmic graph of Bitcoin's price over time. And it's been holding pretty steady. So currently just fell below $7,000, but I am not worried about it at all. It'll probably be my longest held position. And it's one of those things where when I buy and sell shares, and if I have 20 bucks left over, I'll buy a couple extra or $20 worth of Bitcoin. So It's not the safest investment out there, and I don't recommend it should be a large proportion of your portfolio, but it's the amount of money that I am comfortable holding in Bitcoin, and I'll be holding it for a couple years at least. All right, and next up, which is slightly below Bitcoin, is Activision, being 16% of my portfolio. And this was a video that I made a couple months ago, and people have been asking if I've taken a position yet, because in that video, I talked about some of the criteria that I had on the charts for taking a position. And while it did meet that criteria a couple weeks ago, I was still comfortable holding my other positions. But since I've sold those, I have gone into Activision, and I'm feeling pretty confident about it. One of the reasons that I really like Activision is, first off, the games that they have that they're popular or they're well known for: Call of Duty, Hearthstone, Overwatch, World of Warcraft. Those are all fantastic games, and I love them for that. But I think the most attractive part about their company is they're branching into esports. This isn't something they've been doing recently. They've been doing it for a couple years now, but I think esports are a great way of keeping the longevity of your games going. When you have the cycle of every year you're expecting a new Call of Duty, that type of stuff, if you have one bad year or a couple bad years in Call of Duty's case, it kind of lowers the fan base interest. But when you have esports going, it keeps the interest of just the general public. And so the franchising makes it so they have a steady stream of income coming from that. And I think it really improves the longevity of Activision, which is why it's one of my favorite positions. And as I mentioned, that I'll probably sell some Starbucks. So I'll probably end up selling a couple shares of Starbucks and buying more Activision, just because it's a company that I'm going to be holding for a long time. This isn't going to be a couple week swing trade. I think this is a company I'll hold for a couple years. Next up is Snapchat, which is one of the more recent videos I've had on my channel. But when you start taking a look at something for long enough and the numbers look really good, it's hard to kind of sit there and you're like, well, I said all these great things about it. Why wouldn't I take a position? So that's pretty much what happened. I did the research for the video and all the fundamentals look great. The main things that I really like about it is their average daily users, which is 210 million people, which is higher than Twitter, which I was pretty surprised about. Also, their revenue breakdown based off of the ads, I thought was really impressive. I just made a video on that, so if you want to take a look at that, I'll throw that up right now. But Snapchat is one of the more riskier positions, and the negative that goes along with Snapchat is they fell really far, down to about $4, and they're up 190% in 2019. So they've recovered a lot, but when a stock moves that high, that quickly, it's pretty possible for it to fall back. So while I love the fundamentals of the company, the 190% is like, oh, that's great, they've recovered, but it's also kind of a warning flag, which is why it's one of my smaller positions, but I think it's going to be a great position in the long term. All right, and the next two are tied with 8%. The first one I'm going to be talking about is PayPal. PayPal is currently 8% of my portfolio, and the reason it's not higher is because it doesn't meet my criteria for taking a position in a stock. And so the three things I take a look at is it's a company that I know and love, which PayPal is absolutely that. It's one of the first stocks I actually owned. But the next requirement is that it has to have been recently hurt by bad earnings or bad news. Currently, PayPal is sitting at an all-time high, so it doesn't check that box. But I love PayPal enough where I'm confident holding I have one share currently, so it's not anything to write home about, but I love the company, and that's the reason why I want to be a part of it, even though it's only one share. I love PayPal, I love Venmo, and so having one share in my portfolio is really important to me, so that's why it's there. So going with the negative for PayPal has to do with the fact that it's at a 52-week high. It had a pretty solid 2019, and kind of the risk involved in that is if the stock market ends up falling this year, which is kind of possible. I don't think it's more than 50%, but it's possible. I think that if the market does fall, the stocks that had really solid 2019s are going to be the first ones to give back the returns that they had for 2019. And so that's another reason why I like buying stocks that are at a discount, because they're already down and beaten and they're not going to fall as far in theory as something that had a really nice 2019. Like Snapchat had a 190% year. I think they're going to be giving most of that back if the stock market does fall. So that's one of the negatives involved with PayPal, but I only have one share, so I'm not super worried about that. All right, and the last one we're going to be talking about is Macy's, being 8% of my portfolio. And so when I talked about Macy's, the charts do not look good at all. When I talk about the importance of having it fall after bad news or bad earnings, Macy's does not check that box. They have fallen, they've fallen around 50% year to date, or I guess it's 2020 now, so they fell 50% in 2019, but I really like the support that they've built at the $14 mark, and it has pushed up since then. And so it's one of the riskier positions just based off of how 2019 went for them, but I'm seeing a lot of signs that point into the direction that Macy's may be recovering. I like the increasing in their online sales, which I think is really important in competing in today's online focused market. Also, Having a 9% dividend is really attractive. So even if the stock doesn't have fantastic returns, 9% dividend is very attractive. Problem with 9% dividend is it's very high. And I talked in that Macy's video about the potential of them cutting the dividend, which would be a horrible blow to the company. However, everything I've kind of seen about that is pointing to that happening in 2021. So I don't intend to hold past this year. So I think I'm kind of in the clear for that. But it's one of the riskier positions I have besides Bitcoin, and that's why it has a very small position in my portfolio. If it was a very safe stock that I felt very sure about, it would probably be up there with Twitter. The problem is the track record it's had in the past year does not give me the confidence to put more of my money into that stock. So let me know what you think about my portfolio. Let me know what stocks you're watching at the beginning of 2020. Really appreciate the support. And if you liked the video, I'd appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Let's start 2020 green, and thanks for watching.